Very good morning, ladies and gentlemen. Thank you so much for joining us for this latest in this Coronation live webinar series. My name is Wale Famrewa, and I'm delighted to be moderating today's session. Today's theme is protection against the unexpected, and it ends with a question: how confident are you about the future? Before we move on into our deliberations today, I must say compliments of the year-end and Christmas season to everyone. And as we continue to ponder the challenges that we have faced over the course of this last year, I think that today's event provides us an opportunity to learn, to see how we can better protect ourselves from the unexpected. So I'm delighted to be hosting this, and just to get through some housekeeping. This session is being recorded, and if you would like to participate by sharing your thoughts or questions, please use the Q&A field. Just type that in the Q&A field and not the chat field, because it might just get lost in the chatter in the chat. So thank you again. And I know that over time we will see more and more people joining us. But without further ado, I'd like us to now proceed as we invite to deliver his opening remarks to set the tone for today's program. None other than the Executive Director, Technical Operations at Coronation Life Assurance. Ladies and gentlemen, please welcome with a virtual applause, Mr. Adeboale Adesona.
Thank you very much, Wale. Can everyone hear me?
Yes, loud and clear.
Okay,
Please go ahead.
Thank you, Wale. All right. So, ladies and gentlemen, our esteemed guests from Nigeria and around the world, and our distinguished panelists, I welcome you all to this momentous occasion as we gather for another webinar in our series titled Protection Against the Unexpected. How confident are you about the future? It is with great pleasure and anticipation I extend my warmest welcome to each and every one of you joining us from around the globe. In a world where change is the only constant and uncertainty looms on the horizon, our quest for protection against the unexpected has never been more crucial. I am humbled to initiate this dialogue today that transcends borders, industries, and individual circumstances. Our aim is not only to provoke thought, but to ignite a collective spark of innovation and resilience in all of us today. This is not just another webinar like we've had in the past. Today, we embark on a journey of exploration, a journey of discovery and empowerment. Our distinguished panel of experts and thought leaders are poised to unravel the complexities of uncertainty and unveil a tapestry of solutions designed to fortify our confidence in the face of the unknown. I encourage you all to embrace this opportunity fully, to challenge conventional wisdom and to immerse yourselves in a wealth of knowledge that will be shared throughout this event today. Let us not only ponder the question, how confident are you about the future, but let us try to emerge from this experience with newfound clarity and determination. Together, let us unravel the enigma of the unpredictable, and together let us forge a path towards a future where confidence reigns supreme. Once again, I extend my heartfelt welcome to everyone on the webinar and call today. Your presence here today is a testament of your commitment to progress, and I'm truly excited to witness these transformative conversations that are about to unfold. Thank you very much once again for being an integral part of this occasion, and thank you very much for listening to me. I am Adeboale Ojo Adesona, the Executive Director, Technical Operations at Coronation Life Assurance Limited. Thank you. Over to you, Wale.
Thank you very much, Mr. Adesona, for setting the tone and to capture really what this session is about. And we look forward to learning, as we have over the course of the webinar series hosted by Coronation Life Assurance. Now, I would like to invite to deliver a keynote address to further go into the theme of today's event. And I'll just deliver a short introduction of our keynote speaker. He's none other than Mr. Chris Saigbe, Director of Life Operations at Africa Reinsurance Corporation, one of the leading reinsurance companies in Africa. He has over 30 years of experience in life insurance and reinsurance management. He holds degrees in economics and business administration from prestigious universities in Nigeria and Kenya. He's also a certified professional in insurance and financial planning. He leads the life team at Africa Reinsurance, which provides innovative and customized reinsurance solutions to clients across the continent. Please join me in welcoming Mr. Chris Saigbe. It's over to you, sir.
Yeah, thank you, Wally. Thank you so much. Good morning, everyone. I hope you can hear me. Please,
Yes,
Wally,
loud and
can
clear.
confirm. Okay, that's fine. Thank you so much. Great to be with you this afternoon. And also, I want to thank Coronation Life Assurance for putting this together. And I believe it's going to be a time that we can, rub minds together and be able to gain one or two things from this discussion. So I will want to start my presentation on the topic protection against the unexpected. How confident are you about the future? Now, so my presentation will take this format. We're going to look at the introduction. We're going to look at the life goals and financial planning, life stages and the financial life cycle. And we'll look at how to handle uncertainties in financial planning. And under that, we'll be looking at life assurance and also the functions and relevance of life assurance. And how do you protect, how much protection do you need when you are doing your planning? And then we'll look at the considerations in choosing a life insurer. To start the discussion, I want to take this quote from Louis May Alcott, which says that I am not afraid of storms, for I am learning how to sail my ship. In other words, we should not be afraid of the future. We should be able to approach the future with a lot of confidence if only we do a proper planning, especially of our finances. And I think that is why we are here today, to see how far we've done in terms of our financial planning and how confident are we in facing the uncertainties that may occur in the future. So life is basically full of surprises, and so many unexpected events do happen in a person's life, especially when it comes to meeting your own financial goals. And these events that especially affects financial goals, they are mostly natural and also economic events. Natural, for example, in terms of maybe flood, earthquakes and all that. Economic in terms of, for example, maybe loss of job, or even death of a family member, or even devaluation of currencies and inflation. So we're going to look at all this as we go on. And most of these events, they do happen without even announcing. And so they are unpredictable and they can affect anyone at any time of their lives. And these events do impact on the financial condition of people if they are not properly managed. In other words, change in financial status, especially in old age, can be something traumatic if it's not properly managed. Now, there are life goals. There are things that we want to achieve as individuals in our lifetime. These goals may be short-term, it may also be medium or long-term. And as a human being, we do measure our achievements in life by how successful we can accomplish these goals. And so achieving these goals may also be threatened by uncertainties, unexpected events in our lifetime. So a good financial planning program, it will aid us to realize our goals in life with confidence. And that is what we're going to look at today, to see how we can approach our life goals with a lot of confidence. So financial planning is one of the things that we can do to ensure that we meet our goals in a way that, we are so confident about the future. So what is financial, I need to go back, previous one. What is financial planning? I put it as a process of developing and implementing measures to manage your finances to achieve the financial goals that you have set for yourself or your family. We all have financial goals that we want to meet, either in the short term or in the long term. And so financial planning helps us to put in place measures that will help us to meet these goals. And these measures must be comprehensive. In other words, they must touch all stages of our life and all stages of our financial life cycle. It also have to be targeted. In other words, you must have some specific events that you are targeting, certain things that you want to meet, and your planning must target those events. And also, it has to be coordinated. In other words, you must not leave any of the financial stages or your life stage, the state that you are in your life. You must not leave it without planning for it. And so, in financial planning, your investment must touch all the stages of your life. And the protection, you must also have a protection measure that will help you to guide against unexpected events, as you pass through different stages in life. The financial investments and protection must cover the entire stage of your life. And I also say or advise that financial planning should start even before your first income. You should not wait until you have a lot of money before you start planning your finances. You must start as early as possible, even before you start earning your first income. So what are the purposes of financial planning? What are the benefits? What can we achieve? What can we benefit from financial planning? It helps us to be in a very good position when it comes to our finances. So there is financial well-being for yourself and also for your family members. And it also ensures that you do not outlive your income or your financial resources. God can give us, grace to live long. So in your financial planning, you must ensure that you are not outliving your resources or your income. Then it helps us to maintain and enjoy a certain level of standard of living. It also ensures that unanticipated events do not derail your financial goals. Whatever happens during your lifetime, you must protect against it to ensure that your financial goals are met. And it also ensures that you have money at the time you need it. If money comes at the time you don't need it, that money is useless. So you must plan your life, your finances in such a way that when you need the money, that is when you get it. And then it helps in efficiency in your finances and providing you with peace of mind. And this quote below has really guided me in my own financial planning. And I say that you can never have enough money, but whatever you have can be adequate through proper financial plans. Now, let's look at the different life stages of a person. Someone, you come to this life, your mother, your parents give birth to you, then you pass through the school age, then you go on to the working life, you start working, you start earning income. You think of marriage, and then your family is enlarged. Then after that, you go into retirement. And then, of course, the last thing on earth is also death. So these are stages in life, and all these stages, you need to plan and prepare for them. And the amount that you will need in each of these stages are different. They are not the same. What you are going to need when you are just building your family is quite different from what you are going to need when you retire. and you must protect against uncertainties at every stage of this life. Now, this next slide is showing a graph that is very common when you talk about financial planning. And this graph is looking at when you start your life as maybe a young adult, when you have a lot of consumption, you are doing a lot of consumptions, and you're also doing some savings, and then you grow to become a family member. Your family is growing. You now have children. Your wife is there, and all that. And then, so that first stage is actually the stage where you are creating and you are building your wealth. Stage two, you can see even in stage one, you start, there's a lot of savings. You may be having some debts. For example, maybe you have taken a loan, house loan or mortgage to build your house and all that. And insurance planning also starts at this first stage. You must be thinking of insurance and also investment at this stage. Stage two is a stage that starts around 50 years of age, when your family is matured, and then you start preserving your wealth or even increasing it at this stage. Now, stage three is a stage when you start living on the wealth that you have accumulated over the past years. And that is when we talk about retirement, and then you are enjoying whatever you have accumulated over the years. So, and uncertainties can also come or happen at any stage of this financial life cycle. So let's go to how we can handle uncertainties in financial planning. In life, there are certain unexpected events that can happen. Someone may be fired from his place of work. There could be even premature death. In life insurance, we say that when somebody dies, when he still has a lot of liabilities to take care, then that person has died prematurely. So there could be premature death, and there could also be disability arising from accident or even sickness. And then people can be unfortunate that they may have chronic or terminal disease or illness. And then many can be also very fortunate to live long. And so when you live long, what have you done to ensure that your income is also there, or you have enough to take care of yourself? We see the baobab tree that is there. We may not be able to estimate the age of this baobab tree, but it's still able to make his food, to produce his food that is still keeping it going. So that is what we want to achieve in financial planning, to ensure that even at old age, we still have enough income to take care of us. So now, what is the place of protection in financial planning? As we have said, there are uncertainties, and these uncertainties will arise, from unexpected natural and economic events. And these uncertainties will basically be best handled through a protection mechanism. And life insurance presents the most reliable protection mechanism to handle most of the uncertainties that can affect the financial planning of an individual. And so we're going to concentrate the rest of the time to discussing what life assurance is. And I don't want to be too technical in terms of telling us what life assurance is. So that is why I came up with this description to say that life assurance is a financial planning mechanism for transferring the financial risks associated with uncertainties of life of an individual to a life insurance company. And we've mentioned some of these uncertainties. We talk about premature death, disability, chronic diseases or illness or terminal disease, loss of job, uncertainty relating to longevity and all that. These are some of the uncertainties that life assurance can help you to mitigate. In other words, you can actually transfer this risk to a life insurance company, and then you have confidence in facing uncertainties that may arise in the future. So, talking about life assurance, what are the basic functions of a life assurance? Number one, it helps us to replace lost income. Lost income of a family due to premature death of the breadwinner. When a breadwinner dies, the income of that family definitely reduces. Even disability or loss of job can also cause the income of a family to also be reduced. And also for business people, for organizations, if your business relies a lot on a key man, on the experience or the skills of a key person in your organization, the loss of that person can also reduce the profit for your organization. And so life insurance will act as a buffer. It can help you to reduce or to even make up for that reduced profit that arises from the loss of that key person. Then for a family, life assurance also helps us to maintain standard of living. It prevents fluctuations in the standard of living of a family, and it helps to distribute losses among the insuring public so that an individual is not carrying his losses by himself. And then it also provides a stream of income at old age or at retirement. It also helps to reduce the dependency of people on the society. Instead of relying so much on the society, on government, life insurance will help you to be independent, to face your fears, confidently. And it also provides relative stability during periods of unexpected events. In other words, life assurance helps to neutralize uncertainties that can happen in the future. So what are the offerings? What are the products that life insurance companies use to be able to provide these benefits or these benefits that we have mentioned? There are policies or products that are called term assurance products. There are family income benefit products, so that if a family or the breadwinner is disabled or dies, a certain percentage of the income of that breadwinner can continue to be paid or made available to the family members from that date of that unexpected event to when the breadwinner would have retired. This is one of the benefits that life insurance companies do provide. Then there's also the group term assurance, which basically helps employers to meet their liabilities that arises from employment contract terms. And there's also the key man benefit products, whereby a company or a business entity that relies so much on the skills of a key person, if that key person is lost, this type of product will help to buffer or to bring a sort of cushion for the losses or the profits that has been lost due to the loss of this key person. We also have old life products. We have products that also deal or take care of critical or chronic or terminal illnesses. We also have so many investment products. We have unit-linked products. We have annuity products. These products basically are being offered by our host today, Coronation Life Assurance. And so after this webinar, please feel free to meet, to get in touch with Coronation Life for them to explain some of these policies to you, and then you can use it to plan for protecting against future uncertainties. Because of time, I will not be able to go into details of each of these products, but our host is able to explain this to you. So looking at, after discussing about the products or the offering, how relevant is life insurance policies to you, or the services that life insurance render. We've seen from what I've said so far, you can see that it helps in providing family financial protection to the family in terms of replacing the lost income, and also ensuring that we maintain our standard of living. It shouldn't be that because of an event that you did not plan for, standard of living now goes down. That shouldn't be. Your standard of living, if you do a proper planning, especially using life insurance, your living standard should not, degenerate. It shouldn't go down at all. It should at least be the same or even improve. Okay, then it helps to accumulate savings for investment and also for future expenses. In fact, life assurance is the best form of savings. When you talk about saving money for investment, you need to look at life insurance, because it helps you to be very disciplined in terms of savings. But when you use banking products for savings purpose, you may not be able to be disciplined in meeting your goal for the savings, because you are free to withdraw your money at any time. But with life insurance policies, you are disciplined to continue saving until your goals are achieved. And then life insurance can also help you to pay off a loan or a debt in the event of disability or even premature death. It can also help in funding children education. It can also help in tax planning. In other words, like inheritance tax. If you need to pay tax to the government, you can use life insurance to plan for those things. And then you can also use it to attract quality staff for your business as a business entity or as an organization. I've also mentioned in terms of the key man risk, it can help you to provide, income to fill the gap of the profit that you have lost because of the loss of a key person in your organization. And for us, for people who are looking towards their retirement, it can also help you to have a stream of income, after working life. When you have retired, you have a stream of income coming in to take care of your needs at old age. So who are the consumers of life assurance? We talk about individuals, the employers, private employers, and public employers. The government can really help to help people in the society to reduce the dependency of people on government. I give an example of what the government of India is doing through the Ministry of Finance and the National Bank, like the Central Bank of Nigeria. What they are doing in India, what they have done, they have made a policy available to all citizens of India who have a savings bank account with any bank in India, so that if anything happens to that individual in terms of death, the families are paid an amount of about 3 million naira. And this has really helped to cushion the dependence or the dependence on government, for social amenities and support. So government can actually be a very big support to the insurance industry and also to the public if they can come up with things like this. For example, in India, it is the National Bank and the Ministry of Finance that determine the premium that will be paid by the bank account holders, and it's really a big scheme in India. So we can also have associations and families taking up life insurance policies, and also the financial lending institutions. They also take life insurance policies to protect the loans that they've given to their customers. So as an individual, how much protection in terms of money do you need? the amount that you need at any point in time will depend on the stage that you are. It will depend on your age. For example, those who are under the age of 40, they will need more protection because their family is still growing, children are still in school, maybe mortgage loans are still there and have not been fully repaid. And so they would need a lot of protection. And that is why experts estimate that an individual in this age bracket will need like 30 times his annual gross earned income as protection for himself. And the scale goes down as the age increases. For example, from the age of 66 to 70, the amount of protection you need goes down because at that point, probably you have already finished paying your mortgage loans. Your children are out of school, they are working. And so you only need maybe something to take care of yourself, your health, medical, and all that. So you need more of protection when you are still younger. Okay, so let's look at as a financial as someone who is preparing or planning for his finances. What are the things that you should consider when you are choosing your protection partner? In this case, a life insurer. That insurance company must be a licensed insurer. The products must meet your needs. You know, they must meet the needs at every stage of your life. Living, for example, when you retire, will they be able to meet your needs? When you are looking for how to educate your children, will they be able to meet your needs? Will those products meet your needs? So you must look for a company that has products that can meet your needs. Then you also need to look at the financial strength of that provider. You also need to look at the claims payment records. Are they in a position to pay your claims? What are the services, the services that they will give to you? What are the support they will give to you as you plan your finances? Are they accessible? Will you be able to get in touch with them? Are they ready or willing to listen to you and all that? Our host today, Coronation Life Assurance, as they've assured me that all these requirements, they have met them. And so, some with Coronation Life Assurance. So how to achieve resilience in life, in terms of your financial planning? You have to be deliberate about your financial planning. You must be deliberate. It's a conscious effort. It's something that should be part of you, as you grow and you move on in life. Then you need to start early. You need to start early. Even from school, you need to start planning your finances. And then you have to plan for every stage of your life and also every stage of the financial cycle. Your planning should not ignore life insurance. It is a protection against unexpected events. And you are free to take as many life policies as possible. And these life policies must meet the different needs of every stage of your life. And then you must ensure that the premium for your life policies is within your affordability range. You should not take policies that you will not be able to pay the premiums, because it's advisable that you keep your policies active. You should not allow your policies to lapse because of non-payment of premium. And you need to review your investments and also your insurance policies regularly to ensure that they are still in line with your financial goals. So in conclusion, I want to say that unexpected events do occur that may interfere with our financial plans, but the effect can be managed through various protection measures. And life insurance provides that professional and reliable protection measures that will ensure that you achieve your goals despite unexpected events that may happen in the future. It is never too late to start planning to mitigate unexpected events that can derail your financial goals. So my advice to you today is that you can start planning for your finances right from now. Thank you so much. And I want to thank Coronation Live for this opportunity to share my views on this topic. Thank you, Wale. Over to you. Thank you so much.
Thank you very much for that very valuable and insightful presentation, Mr. Saigbe. It's a pleasure to listen to you and to really begin to think about some of these many important themes that we're going to dive deeper into as we continue today's program. So thank you so much. And as I mentioned earlier, if you do have questions or comments, please do your best to type them into the Q&A field, not into the chat field, so that they don't get lost there. And we'll be happy to take them shortly after, actually, as we transit now into the panel conversation of today's program. So I would like to now introduce our panelists who will be joining Mr. Saigbe to do further justice to today's topic. The first panelist that I would like to introduce is Dr. Tunde Salako. He's the founder of Africa InsurTech Lab. It is the premier platform for insurance and technology innovation in Africa. He's a former physician and a health insurance CEO who has a passion for technology, analytics, and business process automation. He's an influential advisor for various international and local organizations such as InsurTech Connect, Sonic Global, and Founders Factory Africa. It's a pleasure to have you, Dr. Salako.
Thank you, Mr. Farmer. Pleasure to be here.
We also have joining us today Abimbola Tiamiyu, who is the registrar and CEO of the Chartered Insurance Institute of Nigeria. She has a rich background in mathematics, actuarial science, and risk management, with 3 degrees from prestigious Nigerian universities. She's a fellow of the Chartered Institute of Insurance of Nigeria and serves in various committees and subcommittees in the Nigerian insurance industry. So she's very versed in terms of insurance in Nigeria, in the Nigeria context. She's also a faculty member at the College of Insurance and Financial Institute Training Center, as well as a certified trainer on micro-inclusive insurance and climate disaster and risk financing. It's a pleasure to have you, Ms. Tiamiyu. All right, I do not hear. Are you with us? Okay, I think perhaps she may have dropped off. Hopefully we'll get her back on. Okay, I think I see her now, but you are muted, but hopefully we'll get all that sorted as we proceed with the rest of the program. So let me now introduce our final panelist. Kenneth Ifeanyi Esu is the head of life underwriting at Coronation Life Assurance. He's a chemical engineer by training with an ACIIN certification, and he has extensive experience in insurance, underwriting, and claims management, having worked with several leading insurance companies in Nigeria. He's also skilled in insurance enterprise solutions, having received training from prestigious organizations. He is a result-oriented, creative, and innovative professional who constantly strives to improve underwriting processes, adapt insurance products, and ensure compliance with regulations. It's a pleasure to have you, Kenneth, join us today.
Thank you very much, Wale.
All right, so let's get started. And I'll come back to you, Mr. Saigbe. Thank you again for the very insightful presentation. And I think a good place to start is to really look at the context of the economic conditions in Nigeria. And how do you assess the impact of the economic changes and fluctuations that we have been seeing recently on life insurance policies and their relevance to financial planning? Because I think the temptation quite often is that when there is financial pressure, you begin to look at what you can shave off in terms of your spend And potentially, I imagine that life insurance is one of those things that people are either considering stepping back from in terms of buying the protection or remaining protected with a policy, or perhaps not even considering it at this time because there are other priorities.
Yeah, thank you, Mr. Wale. Thank you so much. Yeah, that's a very good question. Actually, if we look around, if you ask people to list their priorities in terms of spending, life insurance is actually the last item on the list. But as people who are mindful of the future, life insurance should actually be very prominent, in their list of things that they need to do. And we look at what is happening all over the world, not just in. Is telling us that life insurance should be something that we should all take very seriously. And when you talk about the economic fluctuations in the world, we're looking at things like inflation. Inflation is everywhere, especially in Nigeria. The inflation rate is very, very high. People are losing jobs. Even the currency is being devalued, and it's affecting everything, in the economy. If you look at inflation and even the currency devaluation, the effect of this on life insurance benefit is that it erodes the value, it erodes the real value of the benefit that people are getting. The actual payouts that people are getting from life insurance policies are being eroded. And so most of the time you find that maybe, for example, maturity benefits that are being paid, even annuities that are being paid, the value is being eroded every day because of currency devaluation and also even inflation. And what we can do actually to handle this is that we can have policies that are inflation immune. We can have policies that are increasing. You increase the sum assured regularly, maybe at a certain percentage and all that. You can also have policies denominated in hard currencies. For example, US dollar, if the regulation permits. But there are some countries where regulation has allowed policies to be issued in foreign currencies, in US dollar, in pounds, so that the devaluation of the local currency does not affect, the real value of the benefit that will be paid out to you at maturity or even at death. Countries like Zimbabwe have done this when their currency was being devalued. It became worthless, and so the life policies were now issued in US dollar. So this can also be done in order to address these issues of economic fluctuations. And when you talk about loss of job or for the breadwinner, there are products that we can take to ensure that when a family member loses the job, life insurance policies will come handy to provide a certain percentage of that breadwinner's income to the family members, at least for the time when the person gets another job. So this is the way I see the effect of how economic fluctuations affect life insurance in our time.
Thank you very much. Very, very useful points you have made there, especially looking at the trends that we're seeing globally. Kenneth, I'd like to stay on the same question with you, and perhaps you can bring this home to Nigeria and to Coronation Life in terms of what the offerings that you have. Because the reality is that over particularly the last 2 years, we have seen massive fluctuation in the exchange rates. These are even though things have been challenging in the past, it does feel like this is like a different moment for many people. And so I imagine that there will be innovation in terms of the offerings that you may have in managing this situation for most people. So I just wanted to hear more about the type of solutions that you may be offering right now that can help people adapt to the challenges that we're seeing now.
Okay, thank you very much, Wally. Yes, so so Chris was saying earlier, some of these policies, especially for like annuities, where we know that there's an inflation in the economy. For some Nigerians, let me just use the retirement annuities here. Most of Nigerians just want, let me see that guaranteed monthly or quarterly payout. So if I'm telling you I'm giving you 50,000 naira every month, then that's what they want to see. But when I get that, I'll bring another solution and tell you that, see, there is escalation benefit to cater for inflation. But some of them, they look at the fact that, okay, if you are telling me there's escalation benefit cater for inflation, and then you'll be paying out 45,000 naira at the initial stage, while my other annuitant is getting 50,000 naira, you find it difficult to explain to them because at that onset, he's seeing more because I need more purchasing power at the onset. So that is one of the challenges that we find in that aspect. But it does not mean that it does not exist. It does. If we're so for a professional or a good marketer that is able to convince the annuitant that say this will be better for you in 2 years time, you get more than what you are initially getting right now, because if you can opt for the escalation the policies, that's the annuity policy with escalation benefits, that will pay you more. Then we also look at like for our term protection plan there. Term protection here is to cover or pay benefit. So term protection is to pay benefit in the event of demise of the policy holder
Yeah.
or breadwinner. Now, we are also including riders to these policies. Riders in the sense that it could cater for what do you call it? Permanent disability, critical illness, and also we have even had the option of even including loss of job to it. A loss of job will cater for like say, like at least 6 months. So within that 6 months, we expect that okay, you should be able to get another job. You don't just sit down and relax because you have insurance in place. That would be moral, what we call moral hazard. So we expect that somebody should be able to get back on his feet. But in that 6 month period, the insurance company steps in to make payments and make sure that the family is not disenfranchised without any payout or any money at that point in time. We also have for different policies. We also have in terms of credit life policies here, whereby someone has opted to take out a loan from a financial institution. That policy could also be bought to what to have riders such as what critical illness, permanent disability, or total disability. Also, loss of job in sense that he keeps repaying his loan, he does not default on the risk. But if the unexpected happens, which we don't want, the unexpected could happen, and that's what death could occur, or any of this could happen. The insurance company steps in. Coronation Life steps in to make payments. I think for one thing I like about your Coronation is the turnaround time when it comes to payment. So long as that claim is genuine, we make the payment swiftly to the policyholder's beneficiary, because now at this case the man is already gone. We also have so there's even one that we recently launched that to even make that's making policies affordable, because most of these policies, especially what we call them pure risk policies, they sometimes could be they look expensive, but to an insurance person, it's not expensive because he knows the benefits. But to the layman, it looks expensive. So policies like for like let me say for a term assurance policy now that has been charged at 1%. That means for the 10,000 naira premium for 1 year, you could have benefit as high as 1 million naira to that. Then
Sorry, I can we just stay on that point very briefly? So
okay,
what you're saying in a sense is that you have now created products where by making a payment of 10,000 annually, you
yes,
can purchase cover of up to the value of 1 million. Now
yes,
that cover, I just wanted to you to also clarify what that cover potentially means. Are we only talking about in the case of demise, or are there other things that value can cover
So
for the
that
policyholder?
will cover death and permanent disability.
Permanent disability. Got it.
Yes,
Got it.
yes, yes,
Now, and if I can just build on that,
yes, yes.
could we have similar solutions that maybe could offer protection in the case of loss of job, for example? If you can just play the scenario, because I think these are some real situations that people may be facing uh, currently, or maybe potentially even in the future, given the challenges we're facing.
Yes, yeah. In the future, that's there because for now, to have all those additional riders, we have a little premium charge included. So,
Right.
like you said, like I think Chris was saying earlier, there's no limit to life insurance that you cannot purchase. So long as the premium is payable, you can always buy all the riders in that policy. So like for life insurance, the primary cover is death, and then you can now include permanent disability, loss of job, death. If you look at group term assurance now, the one that most companies purchase for their staff, they have also extended it to include funeral benefits, even spousal cover, as well as even the children cover that are not even part of this policy. So for me, I think that was one of the things that I even looked at while switching to Coronation. I said, let me even see your group life cover. What does it cover? I want to know how well I am protected in that regard. So if tomorrow anything happens, I know my beneficiaries will be well covered in that case.
Thank you very much. And I believe that as we continue, we're going to be
Yes.
speaking to more and more of these scenarios that I think are real, that many people potentially may be facing. And I want to believe that many of our those in the audience will be able to find themselves in many of the scenarios we'll be playing out. But thank you so much for that intervention so far. I'd like to go now to Mrs. Tiamio, and thank you again for joining us. Let us look more broadly at how life insurance can serve as a foundation for financial planning in the uncertain times that we're facing right now. And if you can, to the extent possible, make it really practical for us. Because when Mr. Saigbe was speaking earlier, there are 2 points that I noted. He said, do not fear the future, prepare for it. He also talked about life insurance as financial protection and transferring financial risk. So clearly it is an instrument for financial planning. And I wanted to hear your perspective on how it can be deployed in these uncertain times.
Yeah, thank you very much, Wally. Thanks to all our attendees. I'll be very practical like this, and I'll start from the fact that in addition to what Mr. Chris has said, one of the major things that we can use, that we can deploy life assurance for, is to see it as a way of inculcating in each and every one of us compulsory savings. So the country definitely is hard. Everybody knows it. There's no amount of money you would have today that would ever be sufficient. Even if it was sufficient for you, hang on here and there would make it to be insufficient. So the first thing you have to do is to think of the future. Yes, you don't live for the future, you live in the present, but you also plan for the future. So you say, okay, even if it's only 1,000 naira, 2,000, 5,000 that you can save consistently, that's the thing, not one and off. If it's 1,000 every day, 5,000 every month, 10,000 every week, it helps you to be able to secure the future. So when anything happens, like when Mr. Chris was speaking, he showed us 5 uncertain things that could happen. And the first thing he said, which is glaring to a lot of us, if not all of us in this room, is loss of job. So if we lose our jobs, and we have to do for those in age bracket of 40 and above, and he said times 30. I said, wow, how can I do times 30 of my current income? But you can start now by saving a little at a time. So that is very important. And another thing is to cut our coats according to our clothes. Now, not even according to our sizes. So now if you have 5 years of material, sew a style that will give you enough covering that can take that 5. Don't sew a style that you saw on Bimbola, because it looked good or not. What am I trying to say? I'm trying to say that don't live a false life. You know, everything, we just post it. I want a like on the social media. Do you like this? Do you like that? A new car comes in, you want to buy that. A new phone comes in, your old phone is not malfunctioning, you want to get that. So we just keep acquiring and acquiring, and we don't look at the fact that can we really afford these things? Then another real life thing that we could do is instead of buying on loans or instead of living on loans, let's save towards something. So you want to change your phone. You know that you want to change your phone in 2025, for instance, start saving towards it now. Don't wait till that time and say, oh, I'll get it at a loan, I'll pay over a period of 10 months and I'll pay interest. No. So just learn to live within your income. If we're able to do those three, consistent saving, cutting our clothes according to, or cutting our style according to our clothes, not our size, and also learning to live part-time, not living on loan. That would really help us in these hard times. And I would not leave out the place of the spiritual, because the spiritual controls the physical. Let's also commit everything into the supreme being hand, so that at the end of the day, things will work out fine. Thank you.
Thank you very much. I think that is one of the key messages we can take away from this session, in my opinion, because, you know, while we're talking broadly about life insurance as financial protection, I think the point you've made about savings is so important. It's one that people tend not to appreciate its value in terms of what savings can do in terms of helping you in the future, especially when things move south the way that you didn't anticipate. And life insurance is actually a means of savings that can even buy you other benefits. So thank you so much. I think that's a very important point, and I believe that many of our participants today should be noting that as they go into 2024. What's your savings plan? Can life insurance be part of it? Okay, Dr. Salako, I'm coming to you now, and you are obviously in the tech space, and so maybe that's where I should begin my interaction with you. So all kinds of trends that we're seeing in the world right now that technology is enabling. So let's bring it now to life insurance products and products creation. Can you just give us your perspective about the intersection of technology and insurance, and what kind of innovations do you foresee that we can deploy personally, and then even potentially even service providers such as Coronation Life can infuse into how they engage their clients?
All right. Thank you very much, Mr. Wale, and good afternoon again, esteemed panelists. I think it's a very interesting topic that we're shedding light on today. And I was listening to what Mr. Chris was sharing in terms of the stages, right? And then I was just trying to plot, okay, so how does this translate to me as an individual? I'm sure it's the same thing for everybody on this session at this time. To give a bit of context and in looking at the practicalities of how this will work, I think the first thing that I want to do is let's touch on the demographic outlook, right? This is year 2023, and there's statistics and reports that show that by 2030, we're going to have the retirement, or should I say, people will fall into the retirement age. About 695 million baby boomers will be retired by 2030, right? And on the flip side, what's going to happen is that you're going to have a massive influx of about 1.5 billion Gen Z workers into the workspace. Now, what that means is within the space of just 7 years, between now and 2030, the products that we're advertising or promoting now might not be relevant, right? Because if we look at it from the behavioral economics of these two widely spread generational age gaps, right? Then if we look at in between, right? So where we will say maybe the Gen X, Gen Y, millennials, etc., the products will still be applicable, but there's going to be massive changes, right? Because 7 years is a lot of time. It's a lot of time for transformation and technology to have created so many things. Now, when we look at what is happening as of today, when we talk about the demographics, let me mention emerging models and then the emerging technologies that are aiding and abetting these models to be able to thrive. So when we talk about the models, talk about the concept of what we call embedded insurance, right? A very critical area that is taking a leap and taking notes from embedded finance. What it simply means is that products are now being created in the insurance ecosystem to disappear completely within the insurance products, within, I beg your pardon, within another product, right? So you're basically embedding it at the back end and you're transitioning the lengthy, cumbersome, possibly sometimes disjointed ecosystem to a one check box that is clickable and intuitive. And so what that means is that people will be able to buy products and services, insurance products and services, without necessarily buying the insurance products directly itself. And that takes it directly to when you look at the behavioral economics. If we look at Nigeria, for instance, you look at the ages between 20 to 40, if we stage it that way, majority of people are not interested in insurance, right? And the reality is because for cultural reasons, for belief reasons, for so many multifactorial reasons, right? Well, if you take the statistics and you find out what is going on, majority of the income is being spent in on the betting industry and in the lottery industry. Why? Because everybody's looking for a quick wins as to how they're going to make money. Now, so imagine a fusion of using taking products and writing it at the back of what the customers are already used to and realistically playing. Because what typically happens is they are saying that, look, you don't need to pay those heavy fees. You don't need to just pay what you can. And we take a fraction of it, but everything essentially belongs to you. In fact, we want to make you richer as at the time of your need, right? And I think when you look
I'm sorry to jump in, but can you explain maybe more practically how that would apply in a practical sense in Nigeria, some of these applications of AI?
Fantastic. So in a practical sense, if we live in a world of data, right? And we have a minefield of data that is in abundance. Unfortunately, I think what happens in transparency sometimes because of regulation and other factors is we're not able to use the data to make empirical and informed strategic decisions. Now, at the point where we're able to apply artificial intelligence and machine learning to data, we're going to be able to transmit into what we call prescriptive and predictive analytics. That will be able to guide both on the insurer side and policyholders to make informed decisions, right, without going through any cumbersome process. And so, for example, you know that you're a 47 years of age person. You live in the southwestern part of Nigeria. You have a family, etc. You tick the boxes. You're working. You plan to retire at 65. You decide that I am just going to take a cover that matches my demographic, my family needs. Maybe I just have 2 kids, right? And then essentially what it is that I'm planning to do after retirement, as opposed to the one-size-fits-all product that is readily available today, right? And so when we start to look at those models of how we can actually break things down into variables, right? We take the products and we start to make it relevant to the different age groups and to the different behavioral economics surrounding it. Then we'll begin to start seeing people adopting, because quite frankly speaking, when you look at what people are interested in, when you flip it to the other side and you look at people who are the age bracket of 60 upwards, those are possibly behaviorally the people who are interested in taking our policies because they know that, well, it's evening already and anything can happen. But like to Mr. Chris's point and to Mrs. Ambilbola's point and to Mr. Kenneth's point, it's going through a savings pathway that we have to start looking at how we can do this. And if we're going to make that work, we can only connect through technology, right? There's a lot of applications where from the comfort of your phone, you can make bettings, you can take risks, you can trade Forex, etc. Why don't we take these products, right, and piggyback on these solutions where our consumers and our audience are already taking a bet on their lifestyle?
Right. Thank you. Thank you very much for that insight. And we're certainly going to go back to some of these trends as we proceed. But Mr. Saigbe, I want to come back to you now. And before I go further, I wanted us to just visualize the profile of 5 different people that I think potentially um, everybody on this call will fit into one bracket. One is a student, and I want you to speak to their needs for life insurance cover, a business owner, an employee, a breadwinner of a family, maybe a small family, and a retiree. I think that potentially some people may be lost in some of the conversations that we're having. So I just want you to just try and think through these profiles as you continue to speak to the points. So now let's talk about, again, staying within product development. I wanted to hear your thoughts about the trends that you are seeing emerging for insurance product development that address the needs of the type of policy, the type of individuals that I have described here, so that they're encouraged to actually buy a policy. And maybe you can also situate that comment with what Dr. Salako has spoken about in terms of how technology is enabling many of these solutions to be embedded in some of our lifestyle choices and the products and services that we consume.
Okay, thank you so much, Mr. Wale. Yeah, so there will be a lot of changes, going forward in terms of insurance in how we offer life insurance, and even though the basic principles may not be altered, but the way we offer it is going to be very, very different. Given the fact that the way people look at it these days is really changing, and the new generation, the people who call generation S, Y, or Z, the way they see things is quite different. And these are the future customers, the future clients of life insurance companies. So we must begin to look at ways in which we can bring them on board. Because when Mr. Tunde was talking, he mentioned that people in the 60s, in the age bracket of 60s, 70s, are the ones that may see reasons why they should buy life insurance. So our effort as life insurance professionals is to see how to replace these old ones that are going. And so we must be able to educate and also try to think like the coming generation. What do they want? How can we satisfy their needs? And so in terms of the future, there's going to be a lot of flexibility in the products that we design. And the flexibility I'm talking about is about meeting the specific needs of an individual. It will not be a case whereby right now we talk of, okay, term assurance, this is what it provides, whether it meets your needs or not, you just have to take it. No, we going forward, we're going to be developing products that will meet the needs, individual needs, because again, our needs are different. You may see someone who is saying that, look, I want to have maybe 10 million naira today in terms of cover, but tomorrow I want to change it to 5 million, or I want to change it to 50 million. You should be able to make those changes within those within that product. And so we're going to be seeing more of personalized products. And that is how and we really need technology to help us in that area. Because, for example, we have bank accounts. There are millions of people who have bank accounts with a particular bank. And each of these accounts, they are treated on a personal basis. The services that they get it depends on the needs of that individual. And that is where life insurance will also move to. In other words, even though we have many millions of policyholders, each of their needs are different. The product, the benefits that we are offering will also be different. The services will also be different. Someone will tell you that, look, I have a child who is still in the university when I'm 60 years old, when I'm 70 years old. You need to meet that need. You cannot say, oh, we don't offer cover to people who are 70 years or 80 years. we must be able to have a very great, flexibility in terms of our products and also our services. And then you are going to find out that technology is going to be widely used in life insurance. There will be, just as Mr. Tunde said, there will be digitalized products. Right now, you find out that people are going about marketing life insurance, but we can actually use technology to market our products. And this is happening, in many countries, because this is what appeals to the new generation, the young generation. So we're going to have products being, marketed or even provided from both commencement or taking the policy and even to payment of claims. They will be done on our technology platforms. And right now, you discover that even underwriting, in other words, assessing lives, assessing the risk, is now going digital. Like, for example, in India, there's what they call tele underwriting. Because you see, many of these top people, they don't have the time to go for medical examination. They don't have the time to leave their office and all that. So what many of them are doing in some of these countries is to use the information about that person. What is his lifestyle? Does he do any physical exercise? Does he belong to any club and all that? How many hours of active exercise does he have in a week? And then they do what they call tele underwriting, whereby the person will be in his office and you are taking information, through like a virtual meeting. You are taking information and you are using this information, this data about this person, to assess this risk, whether it's someone that you can insure or not. And so even our distribution method is going to be through so many unconventional methods. For example, you go to South Africa, life insurance policies are being sold in malls, in supermarkets. So you are going to find the same thing happening. In those days, I don't know whether it's still happening right now, where the mobile service providers, they have people all over the street selling, their products. The same thing will also happen, making it, reachable. Because, for example, now you look at an area in Nigeria, you may not find, you want to buy life insurance. You cannot walk out of your door and just cross the road and buy life insurance. But, going forward, these are the things that will be changing. And then, talking about technology, there are countries where people they now implant chips into people, and these chips can give you a lot of information about the person. Even through those chips, the lifestyle of that person. You can even take a reading of the person's blood pressure, of the person's sugar level, and all those things. So it's going to really change the way we do underwriting in years to come. Even claims administration. In terms of claims administration, technology will also help us, because you have information and data about someone. No one can lie to you that is in Nigeria while the person is maybe in Asia. So you'll be able to get information about the person. No more fraud about whether the person has died or not, because information is available. If someone claims that is dead, you can actually go to the data center and be able to check whether the person is alive or not. So these are some of the things that we change. And again, one thing that is very important that life insurance practitioners should take note is that we're going to move from a situation where we are selling our products to selling, measurable results. We are going to be selling results, not just products, because you see, the customer or the client, they want to see that the product that you are giving to them is able to meet their needs. It's not about saying, it's term assurance. is children education. It must be able to meet the need. So we're going to be seeing a situation whereby we are selling our results, our measurable results, instead of selling the product itself. And again, going forward, I'm also seeing that products will not have borders anymore. For example, in Nigeria, you say, okay, except you have an insurance company in Nigeria, you cannot sell life insurance product to people in other countries. Right now, companies are selling life insurance products to countries where they are not domiciled. You'll be surprised that many people in Nigeria they buy policies, life insurance policies that are provided by companies in Europe, companies in Mauritius, and all that. So in terms of border, there won't be border again in terms of the life insurance product that we can sell. So these are some of the things that may happen in the nearest future. Thank you.
Thank you very much for that insight. Let's talk about changing circumstances now. And Mrs. Tiami, I want to come to you again. So earlier, I remember I had plotted 5 different profiles. So let's just continue to keep that in mind. And the interesting thing about those profiles is that they can change. I mean, one of the changing circumstances that I think is just natural is age. And with more age, there are potentially a different set of risks and responsibilities associated with that. So while I imagine that some people, for example, may have a policy already, I want you to speak to the changing circumstances in a person's situation, maybe as a business owner, a breadwinner, a retiree, in fact, and even a student that should suggest changes in the type of coverage that individual should have right now.
Yeah, thank you very much, Wole. It's very easy to say. It's a little bit difficult to implement. Why? Because we are all at those levels. When we all started our careers as early as when we were in our 20s, early 20s, we felt that, oh, let me take this small term assurance, or let me take this small savings plan. Okay, let me use myself as an example. My first insurance was, I said, let me do it so that when I want to do my 40th birthday, I'll have enough money to do a party. And before I got to 40, I'm like, oh, children started coming in. Oh, I need to have a children education fund. Oh, let me do that. Oh, I added it to it. So when that particular one matured, and I had to think twice, do I really want to put this money that I used 23 years to contribute and use it on a party? You know, that's another focus that is changing. So that tells us, like, at different phases in life, you might start off with a plan and think that, oh, when I'm 40, I'll use it for this, or I'll do this, I'll do that. And it gets to that stage and you just have to think again, do you really want to expend it that way? Or even you're retiring and you're thinking, oh, I want to do annuity. You think back again, do I really? There was a man that actually wanted to do annuity, and I asked him, when did your dad die? He mentioned the age. When did your mom die? He mentioned the age. Is there anybody that is above 60 in your lineage? He said no. So I told him, I said, in all honesty, sir, and he was 56. I said, in all honesty, sir, you don't need an annuity plan. What you need is a program to just do like for 10 years, enjoy your money. He doesn't have a child. He doesn't have a wife. So he really does not have a liability as in dependents per se. His parents are dead, only child, this and that. So, and he said, well, I said, I'm not God, but from all indication, when you get to 60, 62, 65, in fact, you may not reach 65, you're going to pass on to the great beyond. Why do a program withdrawal? Why do an annuity that will spread the money for 20 years and there's no benefit? He doesn't even have a next of kin. Is that bad? So why am I saying this? We have to look at each person's situation. You assess yourself based on a lot of things, family history, your plans for the future, the dependents you have, and you make an informed decision. And you can't do that alone. That's the reason why you need people that we call financial planners. You need to get in touch with Coronation or any insurance company and tell them, this is my plan. This is what I want to do. Yes, what Mr. Chris has told us is the generic. Or when you're 40, when you're 50, when you're 60, but circumstances are different. Even you might be 65 and your child is still in school. So you still need a CHEF or a children education fund policy. Meanwhile, there are some people that are 55 and they're already grandparents. So what they need is different from the generic that we have learned today. So each person will look at his own profile and make an informed decision. But be sure that whatever decision you are making, you are not making it in ignorance. You are not making it because that's
Right.
the norm. You are making it with guidance from a financial planner. Thank you.
Thank you very much. And if I can summarize that, knowledge is power. And that is the reason why you need to engage a financial planner. And even though financial planning as a profession is not one that is very glamorous or well known in Nigeria, Kenneth, perhaps you can speak to how a company like Coronation Life are filling that gap in assisting people navigate their changing circumstances. Can you just speak to that?
Okay, yes. So our coordination has been assisting people to navigate these changing complexities here. So we have done this by what developing products that will suit the different needs of individuals. But perhaps, like I said, I think Bimbola just said just now, when you're giving the advice to the person, you have to talk to a professional, and then this compare policies that are available. Like for coronation, we have varieties of products, and then which one would you suit your need? So let me, for instance, like one of our products, the flexible investment education plan, long term and short term. So for long-term products, we have it as a minimum of a 5-year plan and with a minimum annual contribution of 60,000 naira. That means the person is paying what 5,000 naira every month. In this policy here, we have also put that what there's a family income benefit of about 10% of the sum assured, meaning that if there's any debt that occurs maybe after 1 year or 2 years, the next from that time to the policy maturity, there's a 10% of that annual sum assured that's being payable as what the family income benefit here to cushion what the effect that have been paid by the money that have been brought by the breadwinner. Then we also have like a premium waiver just in case, because since the policy holder is dead here now, he's no longer paying premium. But that we as coordination have now stepped in to continue to make that payment for the person. Then there's also the academic best in class award for the child. It's up to it's subject to what about 20,000 naira to just a small money just to give to the child and say, okay, well done, you're actually doing well. Then there's also an accidental medical expenses cover in that policy that's up to about 50,000 naira just in case of accident must have occurred. So we also have for flexible investment short term. This policy is like a minimum of 1 year, 18 months. And then what policy is also what covering here is what the fact that what a death could occur at any time. Like I always use death occur, but the insured or the life assured understands that when the policy matures, is getting the full benefit. But if in that policy period there is no debt, the full benefit is being paid, and then that policy as well, that savings that he's making here is like a very cool towards what his short-term financial goals. And the premiums also are tax deductible for insurance policy. Yes, and I know a lot of people take life insurance policy just because also it will help them to reduce the tax that's being paid by them. So that means they are even earning more in terms of your income. And then the ease of underwriting in this regard also. Also, these policies are subject to underwriting terms and conditions because we also need to know that okay, between this age period. I also want to go back to what Abimbola said earlier to the man that I think his family, the mom and the dad, they all died at 60, something like that. So if I was the one to, if I was the one to advise the man, I would not have advised you to do a program withdrawal. I would still bring it back to annuity, the correlation. Okay, fine, fine. Because I know that yes, for annuity, it's 10 years is guaranteed. So well, he doesn't have a family, baby, he doesn't have a child or so, God rest his soul. But at least there's still extended family that can still give something to. I don't really, but that 10 years too. we want Coronation also this money. Father people will talk about that.
Okay,
Okay.
thank you.
All
Okay,
right.
all right. So, okay, so let me move on to Dr. Salako now. So, again, I want to come back to the issue of innovation, large numbers, embedding insurance, and so forth. And looking at the situation that many are facing right now in Nigeria, with the economic conditions, I think there are two particular areas that I think people maybe not think, they don't think enough about, but potentially there could be high risk issues. One is education for their children. Now, this one perhaps many do think about, but education, and then all we can see in terms of how some coverage, even if it's not phenomenal coverage, but some coverage can be embedded into products and services right now that can help to address some of these issues. I was just wondering your thoughts about that.
Okay. Thanks, Mr. Wale. I think the first thing to just even consider is when we look at the potential of the markets, right? So between now and 2030, it's projected that 25% of the whole insurance premiums, which will be about somewhere around 80 trillion US dollars, estimate by then, will be from the embedded pipeline distribution, right? So imagine 25% of that. Now, when you also consider the possibility of what the gross written premiums of the embedded insurance market can create, it's going to $1 trillion US dollars within now and just the next 7 years. So what that tells us is that when we look at education, when we look at life, when we look at health, these are important pillars, right? And it mixes with different people. It gets received by different profiles that you've clearly delineated at the beginning, at the second comments that you made: the business person, the student, the
Retirees.
employee, etc., etc. So, but how is this going to bridge the gap? How is it going to make this readily accessible? If we come home to Nigeria and West Africa at large, up until 2022, when we started getting CBN give payment service bank licenses to the telcos, we've always led a bank-led initiative on this side of the fence, whereas in the eastern part of Africa, it's always been a telecoms-led initiative. What am I trying to bring to the fore here? It's the limited capacity for distribution that we've had over the years, right? Which is you cannot purchase an insurance policy or insurance cover from the easiest ways where you make your transactions on a daily basis. So for instance, you buy your recharge cards, you buy your airtime, you buy your data, but you can pay through your mobile agents for electricity. These days, in fact, people gain a source of employment by helping you to make recharges for all sorts of things, but you cannot buy insurance via that route. Those are some of the things that have incapacitated the distribution capacity, right, that is available. Because when you think about it, what gives the greatest outreach, right? The telcos are everywhere, right? MTN is the largest shareholder, followed by Airtel, et cetera, et cetera. And if they already have a population market share, it just makes sense to layer this product into their ecosystem, right? And then that now comes to the concept of how is it readily accessible. So when you look at what is happening, going back to Mr. Chris's point, certain things are already happening now where the consumer does not want to waste his time or waste any product. So there's a concept of a secular or a sharing economy that is coming up where people come together and say, you know what, we're going to take XYZ policy, right? And it's going to cover us. And we do it like an insulated cover. Also, the pay as you use, right? Because there's limited disposable income in the environment, right? And so you don't want to start tying yourself to longevity of things that you might eventually not use. Because again, the thinking and the way we've structured our own system here, it's a little bit different. We have to factor the majority of the population, which is less than 40 years of age, are not just going to be inclined to taking this kind of. I do not need to jump, through the fire before I can come out on the other side to get what is attainable to me. Then he starts to think, oh yes, this is very good. The second thing is the word of mouth and the education. Very low education in insurance. We see all sorts of advertisements and promotions out there. When was the last, when you talk about insurance, is there anything that comes to your mind? Whereas when you look at the telcos industry, for instance, some of the telecommunications companies are notorious for their advertisements. In fact, when you see the color come up on your screen, you already know, oh, this is a blah, blah, blah advertisement, right? And some of them are very notorious for even using influencers and celebrities. So once you see the celebrity, you see the color, this is what they're talking about. But it's different in insurance. So we have to start looking at all of this because there's a very, very significant widening trust deficit. That's number one. There's low awareness. And then finally, the product doesn't really fit the markets, right? And so when we get into that PMF stage, which is product market fit, then, we'll start to increase penetration, whether it's education, health, or life.
Thank you very much. I mean, I was just thinking about the point about the communities. I think you suggested maybe be formed in the future where individuals realize that, since they have common needs and they are able to connect on similar platforms, then they can pull themselves together to buy coverage to cover things, a wide variety of things. And I was thinking potentially we could see education particularly, because we all know the challenges with education right now in terms of the cost. So I imagine that any type of savings or coverage that addresses that is one that many will find quite interesting.
To your point, Mr. Ode, and this is where,
Sure.
just to quickly say, this is where insurance carriers, we have to start looking in the direction of how we make these things innovative. There is actually an ed tech company that is doing exactly what you just explained, right? So, and they're not an insurance company. They're providing parents, it's basically saying, see, register with us for free, and you come on the platform, board you, and then what starts to happen is we can now group you into, are you the one that wants to take a loan because you have income, but it's not disposable enough for you to pay at once. So you pay it over stretches with little or no interest rates, right? Or do you fall into the category of, I just can't afford it, but I need to get my child through school? And then, they are supplying, they've created something that is plugging that gap, and meeting that demand by connecting suppliers who can actually bridge the gap of what the consumer needs. So I just thought to mention that.
Right. Well, thank you. Thank you very much for that. So I'd like to encourage our audience that if you do have questions or comments for our speakers, this is a good time to just type them in so that we can pose them to them and they can, of course, offer, I'm sure, very valuable responses to your questions. I want to go back to Mr. Saibe now, and let's talk a bit about, very briefly, if we can, before we begin to take questions from our participants, about reinsurance and how it's embedded into conversations that we've had so far today. What role do you believe reinsurance plays in strengthening the life insurance market against the unforeseen challenges that we could see globally?
Yeah. Okay. Thank you so much. So reinsurance basically is actually insurance service or insurance provision to insurance companies. So the way the public or the individual or the organization look up to insurance companies to provide protection for them against unforeseen circumstances or uncertainties in the future. That's the same way an insurance company looks up to a reinsurance company to also seek for protection against unexpected events that could happen in the future that may interfere with their financial projections. And so reinsurance companies are actually a support. They provide protection to an insurance company. And how do they do that? They provide a bigger capacity. For example, Coronation may take a risk, maybe for example, 1 billion naira risk, and which they know that if this thing happen, they may not be able to pay the claim. So they will not even tell the client that they are not able to carry that risk because they have a reinsurer who is willing or is able to take that risk and share with them. So the reinsurers provide a higher capacity for the insurance companies. And so it helps, it shields the life insurance company, in this case, Coronation Life. It shields them from unexpected losses, big losses. For example, during the pandemic period, many companies, okay, we thank God for Nigeria. It wasn't that very hard on us. But in other countries, it was really, really tough, especially in East Africa. So the insurance companies, the life insurance companies, rely so much on the reinsurance companies to help them. And so reinsurance cover helps you to go through, those expected high losses during events like the pandemic. Then reinsurance also help with human capital development. They provide a lot of training to life insurance companies. For example, Africa we provide, we help the young professionals to grow, and we have a platform that we call the Young Insurance Professional Program or platform, where we train people, where we train young professionals to become, seasoned professionals in the insurance industry. And then, so by doing this, we also help to increase the confidence level of the public in insurance services. You remember that some times ago, even right now, the confidence that people have in insurance industry is very low. But with the backing of reinsurance companies, the confidence is increasing. So these are some of the relevance of reinsurance in the insurance industry. Thank you.
Thank you very much. As we begin to round things up, again, I want to encourage our audience that if you do have particular questions that you have for our speakers, this is a good time to type them in. Maybe there's a scenario that you are seeing in your personal circumstance that you would like to get some insight into. Please do your best to type in your responses. All right, I'm going back to Mrs. Tiamio now. I always like your contributions so far. Let's talk a bit about how insurance can support families. So let's take it home now.
Yeah.
Clearly, there's a saving aspect to it, but I just wanted to speak particularly to, unexpected situations and life events right now. How does insurance play a major role in stabilizing the ship?
Thank you very much. The first one I would talk about is the education of the children. If there's death and the children are still in school, provided the parent, either the mom or the dad, has an insurance policy that covers the life of the parents, the insurance company would come in and then be able to fund the education of those children subject to the terms and conditions of the policy. However, there is no policy that does not have terms and conditions that would at least cover the sum assured. I don't want to use the big word. So simply what I'm saying is, if there's death and the parent has a life assurance in place, the money would come in handy to support the lifestyle of the children. So whether they're in school, whether they're learning a trade, whether they are abroad, they would have something to support them We also have burial plans. There are some people that they don't want to be a burden to the children. So they've already made plans with insurance company that, oh, when, and it's not if, it's when. When I die, give this money to so person so they can give me a befitting funeral. So that also comes in handy. Now to the widow or the widower, when this partner dies, we have insurance policies too that can make you maintain the standard of living that you are used to when the other partner was alive. Because there's this saying that says, oh, the load of two becoming one, the load of two becoming one person. So there will be enough, or there will be some sort of financial resources that can make that load to be a little bit lighter to carry. Then for those of us that are in paid employment, government has made it compulsory for our employers to have what we call a group life on our lives. So it means that if any one of us dies, the named beneficiary would get a substantial amount of money. I don't want to say it so that if people are listening, they will not go and kill their spouses or kill their partners and say, because I want to get money. So I won't mention, but it's substantial enough that you know that as you are crying and bereaving, you are also like, thank God this man was working with this organization because I get something that will take care of the needs of the family. Insurance also helps you. There's somebody that is a living testimony. The father died when he was 7 years old. He's now working in an insurance company. He's an IT person. He's in one of the insurance companies. And he said the insurance company paid the bills of all the four children up to university level, that their dad had a policy like that. So basically, it helps the family to maintain their standard of living. It also would help to also cultivate a little savings, because the guy was saying that from the money that they were given, the mom was prudent enough to also pick out a lump sum from that money. That man must have been very wise, as old as aged as then. The mother pulled out a lump sum and actually bought an annuity when they were 10 years old for 1 million naira. I wonder how much money that man would have bought as sum assured for the mom to be able to pull out 1 million and say, if I'm going to spend on you children, let me also have something to spend on myself when I grow old. So insurance really, really makes us to maintain that standard of living in a nutshell. Thank you.
Thank you very much. And there is a question here which I think is maybe relevant to what you've spoken about up to now. So maybe I'll pose it to you. What happens when a life assured a person who takes a life policy commits suicide? And obviously this is, it's not impossible given mental health challenges that we're seeing in society today.
Yeah, thank you. As at date, provided the suicide is not within a year of the policy, suicide is actually covered, because when the policy was being effected, the person was not planning to commit suicide. So if the policy had been in force for a year, suicide is covered, provided that there are some certain terms and conditions. One, the death certificate will not show suicide, because that's what we use to process the claim. So the death certificate will say brutal force to the head, something on the heart, this and that. So legally speaking, the life assurance company would not be able to say, oh, we're repudiating the claim because it's suicide. Also, provided the police is not involved in the matter, because there's a law in insurance that says that we do not support anything that is against the law. And as at date in Nigeria, suicide is actually a crime. So if the police pursues a case against the family to say your father or mother or the owner committed suicide and is a major scandal or a claim, insurance company may not be able to pay immediately. They would eventually pay when the records or the carcass have settled, but they may not be able to pay immediately. But as a date in Nigeria, once the policy is older than a year, it will be paid, provided some certain terms and conditions are adhered to. We don't encourage people to commit suicide, but we know that, like you said, there are mental health issues now. So when suicide or the person did not plan it at inception, it is if the suicide is planned at inception and we're able to prove
so that's sort of like
that it was, yes, it was fraud, that's when we would not pay. But if it's not fraudulent and it was as a result of times and seasons, then insurance will pay.
Thank you. Thank you very much for clarifying that. And again, I want to encourage us to continue to send our questions so that we can pose them to our speakers. Okay, I want to come back to Kenneth now. And can you just speak to, because we actually do need to begin to round up now, what advice you will give individuals to navigate the complexities of life insurance and make informed decisions? what would you say to people who need to make informed decisions about life insurance?
Okay, so I think they need to first of all assess their needs and their goals. Like, what do I need to, what do I need like in the future? What will I need? How much will I need later on if I'm alive? And then in the eventuality that something will happen, what am I leaving for my beneficiaries? So we need to assess their needs and their goals. We also need to look at the coverage amount. We will also look at the term, that the tenor of the policy they want to purchase. You also need to speak to an insurer or a professional to be able to understand the policy terms and conditions. For any policy that you purchase in insurance, there's always what you call a cooling off period. I think most insurance companies set them up to 30 days. That period is when you are able to like actually aligns with my own needs. Because where we are right now, we are no longer in the stage of traditional underwriting. We are in the stage of continuous underwriting. So people now want specificity. Like this is what I want. So if the policy does not meet that, you should be able to like talk to the insurer. Like I need these are what I need in this policy. This is what it should cover if anything happens tomorrow. Just like say, take for instance, you have made purchase for a policy that covers both the debt and other riders, and then maybe there's a mistake in that policy, and then you are seeing only debt. You should be able to like bring it up immediately. I've seen cases whereby people get their policy documents, they don't read it, and then after like 6 months, you're not coming back to say, ah, this is not what I bought, and this is not, and that. Then you begin to have issues with the insurer because they've also like closed that part of the books and they've also like started doing their own thing at the background. So I encourage people to, as soon as you get a policy document, go through it. Nowadays we don't put those terms and conditions in those small fonts anymore. Everything is bold for you to see. So go through it, read it, and see that it aligns with your needs and your goals, and then with school, continue with the policy.
Yes. Mr. Saigbe, there's a question here which I would like you to speak to very, very briefly as we're rounding up. What does, I believe this should be retrogression. How does retrogression come into play in life reinsurance?
Let me just look at the question. It says, how does what? Retrocession?
Is it retrocession or retrogression? I assumed it was a typo, but you probably know better than
Yeah, I think, yeah, how is retrocession comes into play in life. Yeah, okay, yeah, thank you so much. Yeah, just as insurance companies do seek for additional cover or protection against bigger or higher sum assured. So reinsurers also seek cover for risk that are also very big, and that is where retrocession comes in. Insurance profession is a profession where you don't eat alone. You share the risk. So even the reinsurers that you see, they don't keep the risk to themselves. They also have other contracts that help them to protect themselves. For example, if you have, maybe 1 billion naira cover, which Coronation has taken, and Africaria has taken maybe a part of it, maybe 500 million or 600 million. Africa will also look for another insurer that will take part of it, which is on a retrocession basis. So it's basically a standing agreement between one reinsurer and another reinsurer to cover the risk that the reinsurer has taken. Yeah.
Okay. Thank you for that. maybe we'll take this final question from Mr. Salako. You mentioned challenges the insurance industry faces, such as low awareness, product misfits, and trust deficits. Which of these would you advise insurance companies tackle first, or would you term as a major issue? Also, is there a way to solve one that will solve the other and will make the life insurance or insurance products more appealing to the insurance public? So addressing some of the challenges that you addressed before.
Okay. Thank you, Mr. Wale. So, very quickly, if to put it this way, I mean, once you take care of one of these challenges, it starts to ricochet and ripple into the other challenges, right? And so it suffices to say that education is a major challenge, right? Educating and the awareness bits about insurance. So a lot of us are on this call, and I mean, we're even taking nuggets from all the things that we're being told today, and it's bringing a lot of things to our subconscious. Even though, you know, almost everyone on this call, if not all, is a professional. So the educational bits, right? If that is taken care of in terms of bringing awareness to the fore, that look, this is more of something that actually assists you to mitigate unnecessary or planned shocks that you may go through. People statistically are open and prone to going through at least 3 to 4 shocks within their lifetime, right? And so when you come to the reality of that, you accept that, and you start to think, okay, so how do I mitigate these shocks or this unplanned events? Then your mindset starts to change. So from the educational perspective, there are situations where insurance is being promoted through augmented and virtual reality advertisements. Also, I've seen the concept of gamification, right? Especially for a certain age group, right? People who are avid gamers or like to play online, place bets and everything, where the insurance company is using that to educate and then actually simulating scenarios. So as you're either going through that virtual reality, what's it called, advertisement, or you're playing it as a game, you're actually seeing how this is applicable to you as an individual. The interesting bit about it is when you look at certain communities they already know what they're prone to, right? I think insurance companies need to take a cue and say, okay, as carriers, how do we get to meet the customers where in terms with their behavioral patterns, right? In terms of their economic spend, where's the money going through? How much is being expended on a daily basis? There's an analysis, I think that's by Naira Matrix, that talks about what the average household income goes to on a monthly basis, right? So we need to follow the money, right? And start to plug how we can meet the consumers at this side, you know, especially with the kind of insurance products. Ultimately, when you take care of the awareness, what starts to come into place is the trust deficit starts to get lower. These days, we have artificial intelligence chatbots that are able to respond to you as a customer anytime. So you're not waiting until the insurance company opens the next day, you know, to say, oh, I want to speak to someone. These are some of the things, the infusions that have to come into play. And then finally, suffice to say, I think peer-to-peer influencing, you know, we all know our communities. The respected people from the rural areas to the suburban areas to the urban areas, where if this person latches onto this, you know, typically everybody follows. And it's a digital economy, right? I think Cristiano Ronaldo is one of the largest, that has the largest following on Instagram. It's crazy. I think about over maybe 300 million or something the last I checked, which means that if the man coughs, 300 million people knows that, oh, this man is coughing, right? So we just need to keep abreast of trends like this. And yeah, I'll stop there.
Thank you very much, Dr. Salako, for that. And I think on that note, I would like to say a big thank you to all our panelists for their contributions. I do believe that we've learned quite some things over the course of the last hour plus. So on that note, I'd like to invite now Mr. George Odumuko, Customer Experience Manager at Coronation Life, to deliver some closing remarks as we sign off. Mr. Odumuko, are you there? Okay.
Yes, I
Go
am.
ahead.
Good afternoon.
Yes, please go ahead.
Okay, can you hear me?
Yes, good
Yes, we
afternoon.
can hear you.
Can hear you.
All
Good
right, thank
afternoon.
you. Good afternoon, ladies and gentlemen. My name is George Odumuko, Head of Customer Experience for Coronation Life Assurance Limited. As we bring this enlightening webinar to a close, we want to express our sincere gratitude to each and every one of you who participated in today's discussion on the topic, protection against the unexpected. How confident are you about the future? So your engagement has truly made this section a success, and your commitment to exploring strategies for a more secure future is commendable. Our esteemed speakers, panelists, and moderator have shared invaluable insights that goes way beyond what we usually think about in insurance. We have talked about the uncertainties of life, the vital role of protection, and the effective strategies that empower us to navigate the unforeseen with confidence. We trust that the valuable ideas shared by our special speakers have made you think and maybe even motivated you to take positive actions. In a world full of uncertainties, working together like this has prepared us to face the future. As we conclude this webinar, we encourage each participant to take the knowledge we have shared today and use it in your personal and professional space. Apply the insights gained, share them with your communities, and be an advocate for a future built on resilience and foresight. On behalf of Coronation Life Assurance Limited and the entire webinar team, I extend heartfelt gratitude to exceptional speakers whose expertise enriched this discussion immeasurably. To our participants, your active engagement has been the driving force behind the success of this forum. Let us continue this journey together, committed to securing not only our financial well-being, but also fostering a future characterized by confidence and preparedness. Thank you for being a part of this insightful section, and we look forward to our collective strides towards a more secure tomorrow. Thank you very much.
Thank you very much, George, for those comments as we round up today's program. So I guess we have to ask again, how confident are you about the future? That is a big question you need to ask yourself as we go into the new year. And Coronation Life is at your service to help you secure that future better. Please do your best to engage the team. I do believe that the contact information will be put on the screen shortly. We look forward to receiving your calls. All right. On that note, I'd like to say a big thank you to all our speakers and panelists again. And we look forward to having you at the next event. And for me, it's, again, season greetings and Happy New Year in advance.
Thank you.
Thank you so much.
Thank you.
Thank you.
Okay.
Thank you. Thank you, everyone.
Bye-bye. Yeah.
Thank you, everyone. Bye.
Bye.